What's up, guys? Happy Sunday. I hope everyone had an amazing weekend. I sure did. This was probably the first weekend where Friday I went to a steakhouse. Yesterday I went to a steakhouse. This morning I had a really fun breakfast. I went out. So yeah, this was the first time in quite a while that I did something. Let's see if that affects next week's trading. So yeah, I mean, something smells a little fishy in the markets. And this week is going to be jam-packed with a lot of news. All right, so let's just dive straight in and see what kind of buffoonery we have in store for next week. All right, so Monday, flash services PMI data coming out at 9:45 a.m. Ideally, we don't want to really take any trades before 9:45 a.m., but knowing me, we most likely will. But it's very important that everyone remembers that we have very important data coming out intraday Monday at 9:45 a.m., which will most likely, almost 100%, cause some sort of movement in the price. So we have to be cognizant of that. Then at 11 a.m., Treasury Secretary Yellen speaks. Okay. Tuesday at 10 a.m., similar situation to Monday. Tuesday at 10 a.m., we have consumer confidence data coming out at 10 a.m. Again, intraday, we have something that will cause a movement in the price action. Okay. Wednesday, not really that important. Thursday, we have the GDP numbers coming out at 8:30 a.m. Okay. And then Friday, we have core PCE price index information coming out at 8:30 a.m. as well. So Monday and Tuesday, we have intraday things going on. Wednesday, I mean, we do have new home sales that might cause some sort of issue, but so essentially Monday, Tuesday, and Wednesday, we have something coming out intraday. All right. But then Thursday, we have very important news coming out prior to the market. Okay. So Thursday and Friday, we have pre-market news. Monday, Tuesday, Wednesday, we have news coming out during the market. Okay. There's that. Not to mention, we have very important earnings coming out this week as well. Okay. So Monday, not so much, but then Tuesday, that's when things get very interesting. We have Microsoft, Google reporting earnings after hours. Of course, there's a bunch of different other companies. Well, Raytheon, Halliburton, Coca-Cola, UPS. Then Wednesday, we have Facebook. More gas, power, electrical, IWM stocks here as well. Thursday, Shopify, Apple, Amazon after the close. And Friday, some more gas and oil, electrical company. So this week is going to be very important. In general, it's going to be very difficult to swing anything this week, essentially, because it's all going to be determined. The price action of the overnight is going to be determined by these large tech stock earnings. Okay. So, just be very careful and cognizant. This week is definitely going to be very choppy. Last week was very easy to trade because there wasn't that many macroeconomic news. There wasn't any real earnings. This week is completely different. So, it's, if you're going to take a week off from trading, this would probably be the week because there could be a lot of choppy price action. But of course, we don't take weeks off, and it's going to be fun to trade something like this during this market environment. It's going to be fun to do that alongside everyone, and I'm looking forward to it. So the 30-year bond, it looks, it reminds me of all of the people's wallets of people who betted on Charles Oliveira. No, but I mean, like, Charles Oliveira is actually one of my favorite UFC fighters, and it just sucks to see him lose. But I was telling you guys that Islam was going to win because there's just a clear difference in power between wrestlers that learn submission versus Brazilian Jiu-Jitsu artists that try to learn wrestling. There's just a clear difference, and it'll never really be applicable. Anyway, 30-year bonds, completely vomiting. We are very far outside of the lower level of the Bollinger Bands. So when the bonds are weak, we have to expect that the stock market is weak. But what's interesting right now is that is the complete opposite of what's going on. The stock market is actually, in fact, very, very strong, while the bonds are completely capitulating and making new lows. So things are getting very, very interesting and very, very, we're going to have to see what happens here. And hopefully the most ideal situation for us is if the bonds open up maybe a bit more red, and then that would give more steam for the stock market to continue going up. But even then, I mean, what I feel, right, is if they continue, if for some possibility, if by some miracle the market can continue doing well after this week's earnings, and these earnings haven't completely just destroyed the market, ideally, what I end up with, what I think will end up happening is if this week's earnings are good, this is only if the market for the next week or two will continue to 390 to 400. People will start thinking that we're going to see a new all-time high again, and then we're going to fall very, very deeply into the end of the year. And I am very, very excited for that to happen, if that is the case, right? But what is most important to understand is that the Fed wants us to have a soft landing. Everything that we see so far, there's a reason why we have bottoms and sharp pops. Bottoms, sharp pops, and pops and pops. And this has basically been happening since we had highs, right? They have the concept of a soft landing is they don't want us to just fall. Sharp drop like this, right? They want it to be dragged out, and that's what they're basically doing. So when you take a look at it like this, it's easy to see that they are doing their best to try to prop up the price and not allow it to just completely capitulate. So we have to realize that as we continue to show extreme strength to the upside, regardless of the short-term price action, it's very, very important to understand that the macroeconomic outlook of the equities is still garbage. The only thing that is changing now is that the bonds are taking a huge hit. So that would mean that investors can look towards, this is absolutely insane, but investors and everything can start looking towards equities as a better place to put their money as opposed to the bonds. I'm not sure if that's going to be the case, but we'll see. But overall, this is a very, very bullish sort of situation here. We closed above 371, but this week is going to be very, very choppy. It's almost impossible it's going to be close to impossible to judge the overnight price action of anything, really, this entire week. But the best we can do is basically just look at whether or not we're going to close above 380. If we can close back above 380, then we have 400, etc. on the table. But overall, any sort of huge green candles like this, it's very, very suspect to me. And any sort of strength, it's a good opportunity to, honestly, I would just, one of the safest trades would just be to start scaling into like puts for the summer. And yeah, I mean, regardless of whether, like, how far we go up, 410, 420, 430, we should be falling. And in my opinion, we should break below these lows potentially by summertime of 2023. So yeah, I mean, we could take longer term puts as we continue going higher, and short term, we could just trade the price action up. And we've been doing that very, very well recently. And yeah, so there's that for the SPY. Let's take a look at the NASDAQ. NASDAQ also is clearly showing a lot of strength. Hasn't yet broken above this level of resistance, but it's basically the same concept as the SPY. The IWM, same concept. It's relatively weaker than the SPY and the NASDAQ, whereas the NASDAQ is trading up here. The IWM is still hovering around its lows over here. The other interesting thing is the dollar is starting to fall as well, but it's still holding above this level of support at 111. But it's just very mind-boggling what's going on with the bonds. And it'll be very, very interesting to see what happens this week we are in historical times. This is genuinely very, very historical times in price action. What we're witnessing here and what we're experiencing, and the fact that we are profitable, and the fact that we are, the fact that we're consistently making money is a very, very good sign. Everyone should be very proud of themselves. This is very, very difficult times. People cannot generally navigate these markets at this time. So yes, you may not be where you want to be, but you have to be thankful, because everything is a part of the journey. All of the pain, all of the happiness, all of the mistakes, all of the success, all a part of the journey. The positivity, the positive, the negative, all of it is part of the journey. And being able to experience this with a group of like-minded people is very, very important. And that's what we're doing at the moment. It's a really, really amazing time to be a trader, because there's a plethora of knowledge and information out there. And it's just a matter of how bad you want it, right? You just have to keep on pushing, and eventually it's going to work out. But overall, that is my thought process this week. Be very careful about swinging anything. Things can be very, very volatile for sure this week. It's going to be a week for option sellers for sure. So keep that in mind. Hope you guys have an amazing day. Make sure to like, comment, subscribe, do all that good stuff. I'm going to drop a poll soon, and I'm going to see whether or not people think we're going to see 400 first, or we're going to see new lows. And that's going to be pretty interesting. All right, so take care. Have a good one.